Well, records stumbled across Dalal Street all week. The markets ended Friday at a record close, powered by financials and auto stocks. The Nifty hit an intraday high of 20,223. Meanwhile, the markets gained for the third straight week, but mid-caps underperformed the blue chips. On this week's Editors Roundtable, we decode the PSU Bank rally. We analyze whether a new CEO is reason for stocks to re-rate and put the spotlight on what has been a stellar week for the primary markets. I'm Sonia Shenoy, and with me today, Nimesh, Anuj and Ekta. Folks, what a week, right? This is also a week where we hit a record high, and this is also a week where we saw a massive fall in the mid-cap space. How did that happen?
And this is also the week where all the macros have turned negative for us, right? The crude is at 94, dollar index is 105, globally things are not looking good, and still markets are going up every day. For the last 3 days, every day Nifty is gaining 100 points, so massive momentum.
Yeah, long week actually, and I think this is one of those weeks where I am for sure just gonna go out and maybe
have a drink
or something.
Unwind.
Yeah, I need to unwind for sure. But you know what? As Nimesh said, this is a market in which I keep telling people that a lot of people ask me that should we book now? Should we book now? It's just the kind of a market where you don't think about exiting or anything. Just let the market decide that for you. Every day the market's making higher low. For last 3 days, at least on the Nifty, we have made higher low. Except for the one manic Tuesday when we had the broader market capitulate. Otherwise, it's been a really good goal for the market. Buy on dips market. And also what is happening in this market is that the value is making a bit of a comeback. Whether you look at HDFC Bank, for example, SBI. I mean, it's, at one point we would have never thought that we would discuss HDFC Bank as a value stock. But in this kind of a market, it is now, right? SBI is making a big move. I think there's a lot of sector rotation. Today, for example, all the auto stocks, the two-wheeler names, I think Nimesh highlighted Bajaj Auto in the morning. I think that's the kind of a market which is just hungry for ideas. Every day you have something or other coming up and, doing well.
Absolutely. And, just to give our viewers a sense of how the market shaped up, right? It was a market where we saw a record close. We hit that intraday high of 20,220. And, of course, next week is a big week because you have the US Fed meeting as well. And in that context, the expectation is that there could be a pause this time around. And even if there is a rate hike, there could be some signs of the Fed talking about the end of the rate tightening cycle. And if that comes through, that is extremely positive for risky assets. The other thing is, that's the big question we're asking, could Fed signal the end of the rate tightening cycle? And the other thing is, crude at $94 per barrel continues to be a headwind for our market, although the market has not taken any consideration to that just yet. A lot of individual stocks were in focus. There were auto stocks. IT has come back in a big way. Banks continue to underperform, but there is some amount of recovery that we're seeing in banks as well. And mid-caps, just after that one manic fall that we had, mid-caps have recovered as well. So plenty of action there. But Nimesh, you tell us, what are you hearing from the dealing rooms? Is this buy on dip trend something that's intact?
Sonia, we spoke about we're hitting fresh highs, and virtually every day there has been a rally of 100 odd points. The big takeaway for me this week was out of 5 days, there were 3 days when there was basket selling at a leading FIDS, and on those days the markets have rallied, right? That shows the kind of domestic momentum which is there for the markets, and we're just ignoring all the bad news, ignoring the negative flows as well, and going up. But the bigger theme of this week was the PSUs. Not only the PSU basket per se, but even the PSU Bank stock. They've seen a big comeback in this week. The PSU Bank index was up almost 6%, and a lot of individual stocks have rallied 15-20%. So looks like now the last leg of the PSU is also participating and joining in this rally. So that's something to track going forward. I guess what's helping the mid cap and the broader market is the strong domestic flows. We saw this week as well the MF data on the mid cap and small cap funds, right? The amount of money which is getting in, that's actually giving a lot of cushion to the mid caps and small cap. But I just want to put a word of caution. The last 2 days of rally in the mid caps and small cap do suggest that there is some bit of now distribution as well. So that's a bit of a negative sign, so to speak, from a market angle. But the momentum is clearly there, and markets are ignoring all the negative news, including the FI flows as well.
Oh, absolutely. And in fact, you know what? We got Rahul now joining us. Rahul Arora, who's the CEO of Nirmal Bang Institutional Equities, right here in our studios. Rahul, hi, good evening. Thanks a lot for taking time out on a Friday evening.
And taking us for a drink as well after the show.
Okay, we'll get to that. We'll get to that in a bit.
Is that the plan? I didn't know.
We'll get to that later. But Rahul, what did you make of the market action, especially that Tuesday manic fall in the mid-caps?
So, Anuj, I'll answer this in two parts. Firstly, I wish we had more of those days, to be very honest. And I'll tell you why. As a sell-side broker, it's becoming extremely challenging to justify stocks on FY25. And I'll tell you what's happening. I was with the CIO of one of the top 5 mutual funds this morning. And he said, Rahul, we're getting 50 to 100 crores flows every day. Now just annualize that. Now the problem, Anuj, is when you get that kind of flows, you'll find a lot of mutual funds now getting to owning between 8 to 10% of a lot of mid-cap stocks. Now the challenge as a sell-side broker is either I keep extending my time horizon on which I value a stock. I take it to 25 or average or 25, 26 or 26 or FY26, or then I keep taking my multiples up to some absurd levels, which will look very crazy to me, but then there's no other way to justify it. So I think what we saw earlier in this week was actually very welcome. I don't want to get into the reasons of why it happened, but honestly, if we had 3-4 more days of that kind of fall where you'd have 20-30% fall in quality mid caps, it would make our life a lot easier. So the point goes back to what Nimesh was saying. I think what's absurd to me, and I think a lot of theses are getting challenged in this market, is that at this level also, if one of the top 5 mutual funds is getting 50 to 100 crores daily in terms of flows, it's not out of whack to assume that all the others in the top 5 are also getting similar kind of flows. A couple of things, Anuj, which confound me is by now the world should have already been in a recession. I think we all need to go back to school to figure out, how do you exactly call a recession? Because since Paul Volcker's times, you've never seen this kind of interest rate hike in the US. And by now, we should not just have been in a slowdown, we should have been in a deep recession in the US. But yesterday's retail sales numbers were at 0.6% when the expectation was 0.2. 3x better than what you were expecting ahead of a holiday season. And the other, as Nimesh Bhai will probably tell you, and my mind goes back to Crompton when the stake sale happened. There was a time when any promoter who would sell stake in the market, the stock would get derated. Yeah. And here, you've had almost 1 lakh crores of selling, and people are just not reacting. So there are a lot of theses that are getting challenged in this market. In one line, if I was to summarize, if you're invested in this market, don't sell. But if you're deploying fresh capital, be careful. That's probably the way I would...
Rahul, that point on deploying fresh capital, where is that incremental capital going? Because we've spoken ad nauseum about the mid-caps and the small caps, even micro-caps now. Do you think that the money is going back into the large caps then?
If I was to take a 3 to 6 month call, I'd say it's a no-brainer of a trade for me. I mean, Anuj mentioning HDFC Bank as a potential value. I think valuations in large caps are far more attractive than mid and small caps. And it's not just the listed mid and small. Just look at the subscription numbers that the IPOs are getting, right? It's telling you that the market is bereft of ideas. They want new, fresh ideas that are undiscovered, and therefore you're seeing the subscription. And some of these that have good return ratios are giving you 30, 40, 50% on... See, the toughest job in this market is to be a fund manager, right? It sounds very good. Achha, give me an idea for 2 years, 3 years. But when your 30% of your CTC is locked into your own funds and you're measured on a NAV basis on a quarter, one IPO that gives me 40% on listing day has taken care of my appraisal for the year practically, right? So I think there are things that are happening for a reason, and that's what I said. There are a lot of theses that we need to challenge. There's no need to, as you say in Hindi, market bhagwan hai. So if it's telling you something, it's probably right. And there's no harm in going back to the drawing board and challenging your assumptions or changing it. That's how we all grow as individuals. But that being said, I'm not saying that the entire market is expensive. I think the point was being made on IT. I think there's still some value there. There's still some value in pharma. There may be still some value in cement. So it's not that the whole market is absurd, but you have to work really hard to drill down for those ideas.
Okay, so there are individual pockets that I want to talk to you about. But before that, Anuj has actually put out some good data on the PSU banks. They've been big gainers this week. The index, in fact, rallied over 7%. Anuj, what does your analysis throw up? Is there more to go? I mean, is there a longer runway?
My sense is it's the start of something big, Sonia. Just perhaps the move may have just started in PSU banks. And I tell you what, I look at both technicals and fundamentals while going through these big analysis. Let's start with the nifty PSU bank index. I think that was a talking point. What you see here is a chart dating back all the way from Feb 2004, somewhere around when I started my career, by the way. And, it's now approaching a 13-year breakout period. 13-year breakout phase is what Nifty PSU Bank is attempting. But that's half the story. After that, if you look at two stocks, I think SBI and Bank of Baroda, they would come up for you. That is SBI. That's been the biggest and the best of the PSU banks. That's returned, I think, some 300 or 400% from this point, which the PSU Bank Index has just taken out. And the other one which comes close is Bank of Baroda. That's the other one. Look at that move in Bank of Baroda. Twice it's tried to take that move mark out, and it's finally trying to do it here. After that, if you look at any other big PSU bank, you would be surprised to know that most of them are still at multi-year lows. I mean, this is Canara Bank. This is not a small bank. Canara Bank is India's third or fourth largest PSU bank. Look at where it is. Not even crossing its 2010 high. Forget about anything else. And if you go down to other stocks, I mean, look at Union Bank. Look at the peak, where it once traded. And now I'll come to the fundamentals. This is the technical aspect. What really is the big trigger? And I tell you what, just look at these numbers and I'll just try to explain. Between FY15 to 20, all PSU banks generated a pre-provisioning operating profit of 8.4 lakh crores. But I tell you what, the bad asset was so big, they were generating a provisioning of 10 lakh crores, and that led to a loss of 1.46 lakh crores. This is for all PSU banks. And now look at what's happened in just 2 years. This is the 5-year data. In 2 years, they've generated 6.5 lakh crores of pre-provisioning operating profit, and the provisioning is down to only 3.5 lakh crores, which has led to a profit after tax of about 2 lakh crores. And this number is just picking up. It could be eye-popping, but it's just picking up. Another metric is the asset quality. The gross NPA of the banking universe was 8.3 lakh crores in FY18. That's down to half in FY23, 4.2 lakh crores. But even more eye-popping is the net NPA number. From 4.2 lakh crores, it's down to 1 lakh crores. What's that done is, it's improved the provisioning coverage ratio of the banks from 49% to 76%. That's the kind of change which has happened because of the asset quality. Now the issue is, you can always debate that whether these banks will again make the same mistake in this cycle or not. But right now, it doesn't look like there's too many debatable assets where this issue is going to prop up once again. And finally, look at the valuations. I'm not putting SBI purposely here. Bank of Baroda is still at 1 times price to book. PNB 0.7 times. Of course, PNB will have its own legacy issues. Canara Bank 0.8 times. Bank of India 0.7 times. Union Bank 0.76 times. Indian Bank, which is slightly better managed bank, is at around 1 times price to book. So that's the kind of valuation that you have, and that's, I think, one reason. I firmly believe that this could perhaps be start of something big, but then I could be wrong as well. But Rahul, what would be your thoughts on PSU banks?
So very interesting numbers, Anuj, and I think there are 2 or 3 main reasons why that's happened. I think one is the retailization of banks as opposed to the corporatization of banks. I think if I take your link into 2 parts, the first part was when banks were very corporate heavy, and you don't hear those kind of accounts that are going defunct or need to be provided for. There's a very large retailization of banks, which is Axis Bank, ICICI Bank. A lot of these, I think, are now almost 60-65% retailized, or probably in and around there. So that's the first. The second is obviously with resolution of bad debts, whether it's through NCLT, IBC, bankruptcy code. I think that has helped in reducing the entire emergence of asset reconstruction companies in the last 5 or 6 years, and them agreeing to take over the bad debts of banks at a haircut. I think that has resulted in a huge decline in terms of provisioning, and that's why you're seeing this. Today, PSU banks are operating at the highest ever return on equity and assets in their life. I think SBI and Bank of Baroda have actually bettered their Q4 numbers in their Q1 numbers. But interestingly, Anuj, if you see their fee income, which they get by cross-selling, right? So say an HDFC or an ICICI, the way they will cross-sell general insurance, life insurance, AMCs, public sector banks haven't done that to that effect. In fact, if you look at the fee income that they generate through cross-selling, is less than half of what their private sector peers are. If these guys actually increase that just by 10-15%, their ROAs would increase by 20-30 basis points. And then if you take an 8x or 9, whatever, 7, 8, 9x leverage on that, you have what, 2-3 percentage points added on ROE, which basically means that you still have room to reset valuations on the way up on public sector banks. So would I buy SBI and Bank of Baroda today? Without question. Would I buy them ahead of private sector banks? Without question.
Okay. Well, since the start of 2022, a total of 73 companies in India have had a change of guard. So we're going to talk about that. Nearly 25% of listed companies have reported returns of 50% or more since getting a new top executive. So a new CEO taking over, is it a big trigger for the stock? Does it matter in the longer scheme of things? Nimesh is going to take us through the numbers. Nimesh.
Well, Sonia, it definitely matters to track the new CEO. And I'll just go to the wall and explain as to why I'm saying this. The new CEO has actually led to a lot of re-rating in the stocks as well. I've just looked at the data from 2022. And in the BSE 500, there are 73 companies which have reported the new CEO. Look at the data now. There are 2 companies which have reported, which have gained more than 200% since the new appointment CEO. There are 6 companies which have gained between 100 to 200%. 10 companies which have gained between 50 to 100%. However, there are 12 companies which have also given negative returns. So look at the big movers in that list. The stocks which have gained massively since the new appointment CEO. IRFC, this is a big stock. After the new CEO got in October 2022, that stock has rallied 260%. Adani Power, since January 2022, that stock has rallied 240%. Suzlon, in the last 6 months itself, from April, when they got the new CEO, that stock is up almost 200%. Likes of RBL, that's on 150% since the new CEO coming in June. Look at BSE, other stocks like BSE has gone up almost 150%. Zensa Technologies, they got a new CEO in January, and that stock is up 153% since the new CEO joining in. And something like an Aditya Birla Capital, even that stock is up more than 100% since the new CEO joined in July 2022. Now, there are some stocks which have rallied between 50 to 100% as well. Now, look at that list. PNB Housing tops the list. That stock has rallied 92% since the October of the new CEO joining in. Cyient is up nearly 80%. Aegis Logistics is up nearly 67%. And that list goes on. There are a few more names which have rallied pretty hard after the new CEO coming in. But there are also, some losers as well. I'll just go through the losers list now. CEAT was up 52 as well. Look at the losers now, and that's where there's an interesting name, Jubilant Foodworks. They got a new CEO in September 2022, but the stock since then is down 11%. Quest Corp is down 35% since the new CEO joining in February 2022, and something like a Granville, even that has underperformed, down 5% since the January 22 when the new CEO joined in. But look at the next list is going to be quite interesting, and this is what one need to focus on as investors. These are the companies where the CEOs have recently joined. Shoppers Stop, new CEO, they got a new CEO on September 1st. That stock is pretty much flat. SBI Cards got a new CEO in April 2020, in August 23. That stock is up pretty much flat. Hindustan Lever, that's a big name. The new CEO got in January, in June 23. That stock is down 5% since the CEO joining in, and almost 3% down Y2D. So these are the underperformers as well. But I'll also leave with one more stock which one needs to focus on, which is the new CEO is coming in, United Breweries. They've appointed a new CEO, Vivek Gupta. The announcement came on September 7th, but he's joining on September 25th. The stock has underperformed the entire peers, and Y2D, the stock is on 3.5%. So the key takeaway is when there is a new CEO coming in, generally we've seen in the 4 to 6 quarters, the stocks actually re-rate and give massive returns. So there are some negative names as well, but large part of it gives you positive returns. So this is one big trigger for the stock to re-rate, and that is when the new CEO joins in.
Okay, all right, Nimesh. Excellent data there. And I just want to add one more company to that list, which is Alkem today, where they have announced that an ex-Cipla person used to head the India business is going to be taking over Alkem. Why is that relevant? Is because 65% of Alkem sales are from India, 41% of Cipla sales are from India. So this will probably be a good synergy for them. Let's see whether they manage to reverse the underperformance that we've seen for Alkem. We'll take a short break. On the other side, we'll be tracking the big IPOs that opened for subscription this week. We'll tell you the big names and their IPO value right after the short break.